All right, welcome back. We got a action-packed weekly stock market update. There's a lot to go over in this video. We're going to go over a lot of charts. We had a lot of earnings. We had a lot of economic data. And we've got a little seasonality headwinds that we will talk about at the end of the video. But first, we are going to look at the heat maps. So we're looking at the ETF heat maps, and you can see here a lot of red across the board except for the bond market. The bond market was green. You have the S&P down 2%, the NASDAQ down 2% as well. You've got the Bitcoin ETF down over almost 3%, and gold is slightly up on the week. And when we look at the stock heat map for the week, a lot of red here as well. You do have Meta and Microsoft that did end the week green, but they gave back a lot of the gains that they had. They had great earnings and they crushed it, but they gave back a lot of those gains. And then everywhere else, we've got some deep red. Amazon down 8% on the week. Apple down 6% on the week. Healthcare got crushed this week. The financials, deep red. Basically everywhere you look here, pretty red except for utilities and some of the staples like Walmart and Costco. And the crypto market also took a hit this week. Bitcoin down 3.5%. Ethereum down 4%, and everything else pretty red here as well. So when we look at some of the charts, we're going to look at the S&P 500 first. We've got two big red candles today, and we'll look at the seasonality trends here, but these are the spots I'm looking for us to potentially revisit on the typical seasonality weakness that we get in September and August. So it wouldn't be out of the realm of possibilities here for 3%, maybe 10% pullback on the S&P 500, and that'll be pretty normal for what we've got coming up. And again, we've just had such a monster run here from the tariff bottom, up 33%. It makes sense for the market to cool off a little bit, especially with some of the economic data we're seeing, and we are wrapping up earnings, so we're kind of waiting for that next catalyst, which may not be until the next earnings season in a few months. So that's the S&P. The NASDAQ looks pretty similar, two big red candles here, and again, we are going to be on watch for a 13% pullback, maybe get down to the 500 level for the triple Qs. So I'm not being super aggressive buying here, because it looks like we may be at a little bit of a top in the near term. And let's go ahead and take a look at some of these. Before we get into the individual names, let's look at the volatility, because we got a nice little pop here on the VIX. We had two big green days in a row, and we are at 20 on the VIX. Once we get over 25, that's when things will start to get really interesting for me to start looking around and saying, what do I want to nibble on? And then once we get into the 30s, that's definitely when I tend to be more aggressive on buying. And interest rates did drop this week. The FOMC meeting was this week. They did not do anything. They didn't raise, they didn't cut rates. And I still need to listen to the full press conference, but it sounded like Jerome Powell was kind of hawkish, and the odds of a September rate cut were not that good until we got some of the economic data this morning, and the odds for a September rate cut drastically increased. And that's why you're seeing the yields drop, is the market is starting to price in a rate cut in September. They don't have a meeting in August, but they will have a meeting in September. Oil down this week as well on the weaker economic data. And now we'll go ahead and get into some of the individual names. We'll start with crypto land. Bitcoin pulling back a little bit at 113.5. I'm looking at under 110 to be a nice addition to my Bitcoin holdings. Until then, I'm holding steady, waiting. I will buy some more if we get another 5-10% pullback on Bitcoin. Ethereum, triple rejection here. Quadruple rejection for Ethereum. My next point of interest here is going to be down just below 3,000 if we can get there. Now we'll get into some of the names. Amazon had earnings yesterday, and big drop. I still need to listen to a lot of these earnings calls, so I will be doing that this weekend and putting out some earnings videos, maybe on Sunday. But Amazon, they beat earnings, revenue of 167 billion, estimated 162 billion, so good beat there. I believe the market did not like the AWS market share is not growing as fast as their competitors like Microsoft and Google. I think that's why the market really sold off Amazon here. So next step for Amazon is going to be around 205 and below. If we can get below 205, to me that's a good addition to some shares here for Amazon. Let's take a look at Nvidia. Nvidia did hit an all-time high again this week of 183, and we are pulling back. These big tech companies, they are going to continue to spend, and they also raised their capex for this year. So they're all saying that they're going to continue to buy and invest into data centers for AI. So that's going to be good for Nvidia. Until the big companies say that they're going to stop spending, I think Nvidia is still going to be a name that you want to be involved in. So I'm not doing anything here with Nvidia. My next buy point is going to be in the 150s. If we can get that, that'll be about a 14% pullback, which can easily happen here if we do get that 5 to 10% pullback in the broad market. Tesla didn't really do a whole lot this week, but we are getting close to breaking down out of this little triangle we have here. So we talked last week in the earnings video, Tesla is either going to break out or break down, and we are looking more likely to break down. I do have some covered calls on my shares, and covered calls I think are going to be a nice play here for the next couple of months. So anytime we get some green days, I will look to hedge my portfolio with some covered calls. And let's take a look at Google. Also selling off. They had earnings, crushed it last week. We talked about it, but pulling back after earnings. So, it's a little disheartening after you see great earnings, the stock's starting to sell off, because that was a catalyst to potentially push them higher, but they've already pushed up higher moving into earnings. Now people are taking profits. So it's not that the earnings were bad. It's just that there was the good news. It's buy the rumor, sell the news. And we've got some other headwinds that will likely push these stocks down. It's not going to be the end of the world here, but it's going to be a temporary, likely a temporary pullback. Nobody knows though, so we'll see how bad it is, if it even happens. Coinbase had earnings yesterday. Huge rejection here. Did hit all-time high a few weeks ago of 440, and we are quickly back into the low 300s. Coinbase down 17% today. Still need to listen to their earnings, but let's take a quick look. Reported 1.5 billion, estimated 1.57, but a huge EPS beat of $5 versus $1 expected. So it'll be interesting to listen to their call. They're a very volatile stock when it comes to earnings, just because crypto is volatile. Apple also had earnings. No AI announcements. That doesn't help the stock. And really just not doing a whole lot here. Can't get up near its all-time highs. And next spot for Apple is going to be around 195. Uber will have earnings next week. Not doing a whole lot. Costco may get a bid here just because it's more of a defensive name. And they do have earnings coming up in the end of August. Novo Nordisk. Healthcare getting slammed this week. There was letters sent out to the healthcare companies from the administration asking them to lower drug prices. So you're seeing healthcare get crushed. Where's United Health? Because this thing is just falling off a cliff. United Healthcare. So under $200 looks to be in the cards for United Healthcare. We will have to wait and see. Some other names that had earnings. We had Hood. They had great numbers, really good numbers. But again, stock selling off. Great numbers, but after a huge run, people looking to lock in some profits. Meta crushed earnings. They grew their revenue, I think, 30% year over year, which to me was a big shock. But they're doing really well. Again, huge gap up and looking to give that back. We'll see where they end up in the next few weeks here. And Microsoft, this is a crazy looking chart. Again, crushed earnings. Let's take a look. 76 billion reported, estimate of 74. So they did really well there. Azure is growing and taking market share away from Amazon, but the stock gave up most of those gains from the earnings report. Any other names to take a look at here? Spotify, this is one I have on my list to potentially add to the portfolio. We get under 600 bucks. I need to listen to their earnings call and start to price this one out, see where I want to get involved at. But they missed their earnings. I know that they had a large expense that they had to pay their, they had a tax bill because they've given out so much stock-based compensation, and they had to pay a big tax bill based on that. So that hurt their earnings. No other names I really want to talk about here. Let's go ahead and get into the, let's look at the economic data that we had this week. We already talked about the Federal Reserve. They did not raise rates. We had the GDP number, which came in stronger than expected. 3% GDP quarter over quarter, estimate of 2.5%. So that's good. And then this morning, we did have some jobs numbers. So the non-farm employment change was 73,000 jobs. The estimate was 106,000. But the big news, which they don't have in here, was the revised report from last month. I believe the number was that we added last month 140,000 jobs. They revised that down to like 14,000. So they were way, way off. And it was a huge revision down. Which is just not good, and it just shows how outdated these metrics are and how poor they are. The fact that the name of the metric is non-farm employment shows you how old this method of collecting data is. We're measuring the non-farmers. I don't know, I can count on my hand the amount of farmers that I know, and I grew up in a farm town. So that's a big shock, and that sent the market to really think, well, how strong is the jobs market? How strong is it? So we will see what that means for the next rate cut in September, or if we get a rate cut in September. The odds drastically increased after the revision came out because it shows that the employment market is a little weaker than what we thought and what we've been thinking for the last few months. We had Jerome Powell talk about how strong the jobs market is and how we need to see how inflation plays out. But now we're looking around and saying, well, hey, you thought the jobs market was strong. Turns out it's a lot weaker than we all thought based on the revision. So we'll wait and see what they do in September. And let's take a quick look before we get into the seasonality. What do we have next week? So we got PMI, some more employment. So pretty light news week next week, only 2 red folder items. So we'll finish up with some more earnings next week, and we will see how the market does with all this seasonality. So seasonality, we close out July. Seasonality becomes a headwind. August and September are historically the weakest months for stocks. This does not mean an immediate collapse, but we should expect volatility, especially with the major catalysts like the unemployment report from this morning and the earnings. So the historical August sell-offs the last 5 years. In 2023, we dropped 10% into October. In 2022, which was a terrible year, we had a dead cat rally in August, so the market bounced up, and then a 20% drop after that. In 2021, we had a flat August and then a minus 9%, which began on September 1st. 2020, we had a strong August, but September 1st, again, September 1st, it's like it's scheduled. We had a 15% correction. And in August of 2019, we had a August correction from the July highs. So the last 5 years, it has not been pretty this time of year. So portfolio positioning tips. I did book some profits and some swing trades. I didn't have any leverage ETFs, but things like Ethereum ETF that I bought and was up 90%, that was in my trading account. Got rid of that and freeing up some capital to go buy some blue chips if we get a nice dip. I'm not selling any long-term holds just because we're pulling back. I'm not selling any Nvidia that we bought at 95. I'm not selling any Amazon that we bought down near those tariff lows. There's no need. I don't think we're going to get back to those lows, and if we do, I'll just buy some more. I don't want to sell in anticipation of a correction, especially selling blue chips. I will get out of my trades and I'll free up some capital, but the great entry points that we got from the tariff lows, if you bought back then, I wouldn't sell your stock if you're looking to hold them for long term. That is my thought process. But instead, you could look at some covered calls. You could look at hedges, put spreads to manage your risk. That is just some tips for your portfolio positioning. And the current pullback, we are 3% from all-time highs for both the S&P and the NASDAQ. The VIX is up over 20%, and that is signaling some short-term fear. And here is the classifications for pullbacks. So a dip is 0 to 5%. So we are not even in a dip yet, or we're in a dip. And then a pullback is 5 to 10%. Correction is 10 to 20%. Bear market is 20 to 50%, and a crash is 50% plus. So historically, we spend 78% of the time within 20% of all-time highs, and 92% within 30% of all-time highs. 84% of any 5-year periods are positive, and 96% of 10-year periods are positive. So pullbacks are opportunities. So what you do during these pullbacks is what will determine long-term wealth. So yeah, so that is what we're looking at for the seasonality. And I think that about covers it for this update. So it'll be an interesting and it'll be a volatile next couple of weeks, most likely. It's great to see the interest rates start to drop, and it'll be, to me, it'll be very welcomed if we can get some other entries in some of these great stocks. I love seeing Amazon down 8%. I'm excited for Nvidia's earnings coming up, and if we can get some additional entries on these great companies, because we're seeing these earnings for these big cap companies, they're crushing it. They're killing earnings. So if the fundamentals are improving but the stock price goes down, that's the perfect scenario for me. So don't get lost in all the headlines. You're going to see a lot of headlines on the stock media. Time to sell, it's overheated, we're going back to tariff lows. I'm basically ignoring all the tariff news, because anytime we get a headline, we're raising on Canada, we have a deal with EU. I don't think there's going to be a huge substantial hit to these companies' earnings, and that's what's most important. So the fact that we're seeing these companies kill it in spite of all the tariffs that were announced a month ago or a quarter ago, I think we're going to continue to see that for the rest of the year and moving forward. So that is all I got for this update. Longer update. Everyone enjoy their weekend and look out for some earnings videos coming your way. All right. Peace out.